Alrighty guys, what is going up? Welcome back to another episode. In today's video, I really want to talk about Visa versus MasterCard. What is the better investment? So I hope you guys enjoy it. If you get anything in value, hit that like button and subscribe to the channel. If you have any questions, concerns, ask them down in the comments. And guys, we have a course and you guys can learn how to properly invest in the market. We talk about fundamental technical analysis, how to find undervalued stock. We talk about taxes, dividends, REITs. We talk about it all. And I'll put a link to that down below. It's only around $50 and you guys can use promo code DIVIDENDS to get 50% off. So I'll put a link to that, so check it out. So now guys, Visa versus MasterCard, roll the intro, let's go. Bam! So now the first thing we're going to talk about is the fundamentals. So this is going to be all the stuff that I love. This is going to be like revenue, payout ratios, price to earnings, long-term debt, cash on hand, all the stuff that any long-term dividend investor will love. So if you guys want to actually look at the technical analysis, go to this time right here. And in my opinion, technical analysis is for more swing trades and short-term volatility, but you can still do a good job with your investments with technical analysis. So starting off with the fundamentals, what company has the higher market cap? Well, this might come to a surprise for some of you, but Visa checks off the box. Now, their valuation is extremely high, but it kind of makes sense because their valuation right now is $480 billion, which is very, very high, but MasterCard's honestly very close to them, right at around $358 billion. So they're both extremely close to each other, but Visa checks off the box for the higher company. Now, most of the time when you have a company that is worth more, you will have better revenue and better sales. And yes, Visa has both of those. Well, looking at them here, they have around $21.8 billion in revenue compared to MasterCard with around $15.3 billion. Both are very, very good numbers for how strong their companies are. And honestly, guys, one thing that's phenomenal that I love Visa for is their profit margin. Visa's profit margin is off the wall. It's at 48%. So what that means is for every $100 Visa brings in, they profit $48. $48. Compare that to Tesla. Tesla has a profit margin at 2%. Walmart, 1.8%. Home Depot around 9%. So this is like doubling, tripling, quadrupling all these other places and all these other companies. So it's crazy. But the thing is MasterCard's profit margin is still phenomenal at around 40%. Every $100 they bring in $40 in profit. It's phenomenal, guys. It's great. Now, one of the most important things for evaluating a company is the price to earnings. This is pretty much a way to figure out if a stock's a growth stock, if it's undervalued, if it's overvalued, stuff like that. A lot of people love this. And really what it is it's your cost to buy $1 of earnings. And obviously anytime if it's above a 35, that's considered, in my opinion, a growth stock. And anytime that the price to earning increases, in my opinion, I think the risk level goes up, but also the reward. Now, this is why companies like Tesla have very, very high price to earnings. The volatility is very, very high. The risk is very, very high, but the reward is high too. And people have made so much money off those stocks, guys. So don't be concerned if a company does have a extremely high price to earnings. Just understand that that company will carry a little more risk, but often a little more reward. So with that being said, Visa does have a lower price to earnings. So it's a more stable company compared to MasterCard. MasterCard has a higher price to earnings at 60, which is pretty high compared to Visa's 51. But now for all the dividend investors like myself, what is the best dividend stock? Is it Visa or MasterCard? Guess. Ask it in the comments. Guess in the comments. Well, I don't know if you guys guessed it, but the one and only Visa does check off the box for being a better dividend stock. Now, the reason why I say this is because they pay more on their dividends. They have a higher yield, in my opinion. And actually, not in my opinion, facts. Now, their dividend yield right now is around 0.57 or around $1.28 compared to the one and only MasterCard. They do have a lower yield at around 0.46%, but it's a more expensive stock, so that dividend yield or that dividend price is higher at around $1.76. So now the last thing on the fundamental side that we're going to cover is the payout ratio. What does that mean? Well, so what a payout ratio is, it's a ratio to judge how much a company pays out in dividends. If that's just say a company pays out 100%, they pay 100% of their profits to their dividend investors. It's terrible. You want to make sure any investment you have, there's enough money left over that the company can reinvest it into the business to grow it, because you want a good dividend, but you also want that stock price to increase. You want the company to become more valuable. You want that share price to go up. That's why you need a lower payout ratio. And Visa does have a lower payout ratio, which is good. Let's look at the numbers here. Looking at the numbers, they do have around a ratio at around 23%, which is lower than MasterCard's 25%. So in my opinion, both of them guys are very, very solid investments for the long term. And over the past year, they've gone up 19%, MasterCard 19.1%. So if you're looking at growth, MasterCard might be a little better, but it also carries a little more risk. But now let's actually look at the technical analysis, support, resistance, and my price target. Let's go. Alrighty guys, so looking at Visa, you guys can see Visa does have some resistance here at around $215. And yeah, it did break out of that, hitting some highs here at 28. Support here is at around $200. Both of these are phenomenal long-term. Support heavy is the 200 moving average line. So now let's look at MasterCard. MasterCard does have a very, very similar chart here, hitting that 200 moving average line, getting buying pressure, breaking out of the resistance here at around $350, hitting highs here at around $380. Both of them are very, very solid companies, but MasterCard is a little more expensive. So if you guys actually want to capitalize on share size, Visa would be the way to go, and Visa is the one that I choose. That's one that I heavily invest in. I still invest in a MasterCard, but I am investing more into Visa because their fundamentals are good, their charts are good. It's a great investment for the long term. So that is it though. I hope you guys enjoyed the episode, and if you did, hit the like button and subscribe. Remember to stay happy, stay positive, and stay safe out there. We'll see you later. Take care. Bam.